The third quarter early numbers from corporates indicated a slowdown in some sectors. IT has done better than expected, but clearly worse than previous quarters. Consumer companies like Bajaj Electricals also complained of slowdown, and now the DMart results clearly prove that consumer demand, both FMCG and durables, has slowed. One good way to understand if the economy's momentum has slowed in the third quarter is to look at hirings. After all, you hire only when you're very sure of the growth in the coming quarters. I have with me two experts on the matter, Pawan Goyal, the Chief Business Officer at Infoedge, and Ramani Dathi, the CFO, Teamlease Services. Sir, Ramani and Pawan, thank you very much indeed for joining me. Pawan, you are the one who mans the Naukri job index, right? So, you know, I saw the early numbers that you sent me. 2022 as a whole, the hiring is 20% more than 21. But December is some 4% less than November. So should we walk away with the view that 22 was good, but it slowed towards the end?
Yeah, so if you want to look at the sort of long-term trends, it would be good to compare December 22 with the first half of 22, and that will give us a more stable estimate. And as we look at that, there's a mixed picture on economy that emerges. Sectors which are indexed to the global economy, such as IT, there's a marked slowdown, which is in the approximately 19% slowdown. However, sectors which are indexed to local economy, such as insurance, oil and power, hospitality, banking and finance, auto, they have actually grown fairly robustly in December compared to the first half. So it's a very nuanced, mixed picture that I would say, and it doesn't necessarily portray that next this Q4 of 23 Q4 will be slower.
Okay. I actually got your, I went through the entire number you sent me, and it's an extremely detailed table. You know, as you point out, yes, insurance, oil and gas, banking, real estate, all of them have risen, you know, some of them over 20%, insurance 51%. But the bulk in terms of numbers, aggregate numbers appear to be education, teaching and training. That's down 9%. IT software services, obviously about, 4,100 jobs in December, down 19%. Therefore, what is the aggregate picture?
So let me just clarify the way our JobSpeak index works. That 4,000 number that you're looking at IT, you should not read it as an absolute number.
It's an index number.
It is an index number. So the index number will not be comparable across sectors. Okay. Within sector, it is comparable. Okay. So the aggregate volume is reflected as 4% year-on-year growth based on all the different job sectors that are reflected on our platform.
Okay. Well, I'm coming back to you, Pawan. Let me get Ramani's first thoughts. Ramani, you know, you are speaking of a very strong hiring in the lower echelons, entry level and junior level. And Pawan's Naukri index actually indicates a very strong hiring at the senior and professional level. Should we understand that you all cater to two different worlds? Teamlease caters to staffing services at the bottom of the pyramid. And therefore, you find very strong hiring there. Probably people looking for a CEO or a top professional maybe go to the Naukri index, you think?
That's right, Lata. So we mostly deal with entry and mid-level jobs, both in IT and non-IT. Within IT, again, Q3 is typically a weaker quarter because of furloughs and the holiday season. So even going by the past trends, there is a weaker hiring within IT. But by end of December, we get early trends for Q4. But this time, even those early trends are also very weak. So we believe next 2 quarters as well in IT may continue to remain little slow on overall hiring. So coming to the non-IT side, again, historically, Q3 is a very strong quarter for entry-level jobs, especially sales, marketing, delivery boys. So these kind of profiles. And this time, despite the festive season in Q3, we haven't seen any large number of hirings happening. And also, if I look at the Q4 trend on a quarter-on-quarter basis, It used to be about 5-6%, the growth between Q3 and Q4. But this time, if you look at our outlook for Q4, the intent to hire is only 3% quarter on quarter. So we believe Q4 will continue to remain slow on overall hiring, even for entry-level jobs as well.
Oh, that's important. I thought when you wrote up 3% from Q3, I'm looking at an upward trajectory. But you are smelling slowness both in Q3 and even more in Q4?
Yes. So 3% is the growth from Q3. But historically, if I have to compare between Q3 and Q4, it would be 5 to 6%. But this time, the intent has come down to only 3%.
And is IT and e-commerce largely the culprit?
Yes, especially IT. As I indicated earlier, we haven't started getting any kind of indication on whether the hirings are opening. However, the good sign is that all the 3 IT companies, they have reported gaining new mandates and new orders. So, and also for last 2 quarters, they haven't done any substantial hiring. So we believe that there will be some pickup and some momentum in the hiring starting this quarter. But having said that, it's not going to be very strong.
Okay, Pawan, let me get the same perspective from you. If you looked at the December numbers, the overall 22 numbers are excellent. I mean, 20% is a very strong growth. But if you looked at the tail end of the year and the indications for Q4, are you getting a sense that the intensity of hiring has slowed at all?
So, as I mentioned earlier, I think IT is where we see the challenge. Non-IT sectors continue to see a robust momentum. So now, how will it play going into Q4? I don't have the crystal ball, but if I look at historically, when things slow down in US, with some lag, IT usually picks up in India. So if you go back to 2000, post 2000, there was a pickup. Post 2008, there was a pickup. When and how it will repeat in this year, it's hard to say. But in the next quarters, we'll see that momentum picking up in IT as well. But non-IT seems robust. Non-metros also seems robust. Only metro cities which are indexed to IT is a little soft.
Pawan, I'm asking you your overall impact, and you don't have to tell me Q4. Even if you tell me by what is already with you in terms of behavior, Q3, I'm just wanting a little more perspective on the fact that December hiring was 4% lower than November hiring, and it was up 4% year on year. What are the usual intensities in December, November? Is it normal for hiring to drop in December? I mean, if I'm asking you to cast your mind back even to pre-COVID levels, and I'm asking you whether these are normal trends, or should we worry that December was 4% lower than November?
So, Lata, one correction. This 4% growth is year on year. It's December 21 versus...
I get you. Exactly what I'm saying. Is that supposed to be a normal number? Or, like Ramani is telling us that January hiring intent is 3% higher than Q3. But in normal Januaries, she has seen 5 and 6%. So that 3% is slower. I'm asking you, is this 4% a normal hiring pace? Or, does it indicate slower or faster?
Yeah, so I don't have that historical, that long a perspective on that one. But it's usually December will pick up compared to October, November, which we see this year as well. That's usually post-holiday season impact. And we don't have historical numbers with respect to how much normal pickup we'll see.
Okay. Your data is indicating that hiring was very good in the non-metro cities.
Yes.
Pawan, it was not so much Bombay, Delhi, but the other cities. Can we assume that even over there, it was the top echelons that saw more demand? Because Ramani's data is exactly the opposite. She sees more hiring in the top cities, not so much in the, tier 2, tier 3, tier 4 cities. So just your thoughts. When you say hiring is very strong in the non-metros, is it for higher level jobs or lower level jobs?
We report only on white collar. So this is a reflection of white collar jobs that we have. We don't cover gig economy, temp staffing, and all of those. So in white collar, yes, in non-metros, in the segment of eight years experience plus, it is robust in non-metros as well.
Oh, okay. And Ramani, what are your observations in terms of metro hiring? You particularly feel that non-metros were not very active this time.
Yes, Lata. So especially on non-IT front, we are not seeing a great hiring momentum in non-metros because the overall number of jobs itself have come down relative to what we have estimated or what we have seen during the first half of the year. So the limited number of jobs or limited number of hirings are largely happening in metros and cities. Also within IT, if I take last year, we had a growth rate of 35%, whereas this year we are also indicating that it's going to be either flattish or a very low single-digit number, which is very much close to what you have indicated, only a 4% growth year-on-year between last December to this December. So that's the kind of trend that we also have seen within IT staffing as well.
Can you compare the non-metro hiring vis-a-vis non-metro hiring in previous years? Would you worry about that?
Yes, definitely, because last 2 years we had, barring the COVID phase, after COVID, we have seen very good hiring in non-metro, and also the early indications were very good. Like lots of companies were talking about more hirings in tier 2, tier 3 places for cost control or bringing in more people, opening new offices in smaller towns and cities. So that time the momentum was very good, but with overall slowness in hiring and demand across all verticals. It's not specific to IT because we have seen relative slowness compared to the estimates, be it in retail or FMCG, banking, financial services last quarter or so. So with those numbers coming down, we have seen the hirings getting more and more restricted to metros and cities.
Okay. It's a pleasure speaking with both of you. Ramani and Pawan, thank you very much for joining me. It seems to reiterate the K-shaped recovery that people have been talking about, that upper echelons and metro cities have done well, and non-metros also in the upper echelons. But when we come to blue-collar jobs and, of course, IT and e-commerce, there is a distinct slowness which we have to worry about. Ties in with what the FMCG companies are telling us. Wrap up on Bazaar trading ideas for you on Chartbusters.
Co-powered by Century ProWood MDF, the wood